So exciting news for Bitcoin at almost again at all-time highs at just shy of $112,000. And here, I want to dive deeper into what is driving all of that, but on a macro perspective, because it's extremely difficult to explain one single factor that is responsible for that, because Bitcoin can be everything. It can be a trading tool. It can be long-term asset holding. It can become a commodity, or it can just be a risk on asset. So all of those create a lot of confusion on why exactly it's going up. But first off, let's see the price action, which is our favorite topic here. So let's dive right into it. So you see, so two things that catch my attention is that the long-term trend, of course, it's up. This is absolutely clear, as you can see, for many, many months. But I would like to get more into this part here, which is extremely interesting based on the whole Liberation Day and the uncertainty about tariffs. For the very first time, we had a lot of criticism towards Bitcoin because we didn't know, okay, what kind of asset is that? Is that truly a safe haven? Probably not. So we traced back to 76,000. I remember that, 74,000, and this was April. So this is extremely interesting. So the price movement that we have seen in just a few months back is really the most interesting part. And this has a lot of change about the correlation or the composition of Bitcoin. Is that just a risk on asset? Is that just a leverage play on the Nasdaq? And I believe it's not really the case anymore. So we see more and more traces of commodity-like or global-like asset that is being used for many reasons at the same time. And this is why it's extremely difficult to create just one single narrative for that move. And I was just trying to browse a little bit today of what the mainstream media is saying is actually driving it. So Yahoo Finance is just saying about the whole Liberation Day, and it's talking about how it was brought back from 70,000 to today's prices, based on the whole executive order from Trump to establish a strategic Bitcoin reserve, but they don't explain why it went down in the first place. So it's a little bit of mental gymnastics here. And if we dive onto other reports like this one here, so it shows a little bit of risk on sentiment and bull increase in other assets like XRP or just Ethereum and so on. But again, so is it risk on? Is it a safe haven? And I'm gonna try to give you a new perspective, a different perspective that has everything to do with world's liquidity and how Bitcoin is now being a crucial part, and maybe a permanent part of macro perspectives on liquidity. But before I jump into that, just to let you know, we discussed a lot of what drives that. I talk even about the liquidity sandwich that Bitcoin is actually part of, that has everything to do with US bonds. And you can find that on the description below on our latest BI report. It's a very complete report that we do here on the team. We put a lot of effort here, and I think you're gonna love it. So links are on the description below, and make sure to use the promo code for 5% off. All right, so the perspective I'd like to give you is not only to see as a risk asset like the S&P 500, but now let's talk about US bonds. Why are they so important? I mean, as a Bitcoiner, you might be like, oh my God, this is the most boring of assets. But this is extremely interesting to see, because narratives drive a lot of what's going on, so that you make less educated decisions, so to speak. And one of the biggest narratives we have seen was bonds are not hot anymore. So nobody wants US bonds. The US is not to be trusted. But bonds are used for the whole banking system as collateral. Why is collateral so important? Collateral is used to generate credit in all institutions around the world, and what we call the Eurodollar system, the dollars outside of the United States. Because why are they so important? Because there are more dollars outside than inside of the United States. There is more debt outside than inside of the United States. If you understand that, you understand credit, and then you understand liquidity, and you understand Bitcoin prices. And this here is crucial to understand. If we see here the 10-year yield on the treasury bonds, they are as a reference for everything else. So mortgage rates in the United States are based on the 10-year yield. And you see that the less volatility we have on interest rates, the more stable they are as a collateral. The more stable they are, the more credit you can get. And that's how it drives liquidity, and it goes towards Bitcoin. And you see here that despite the whole narrative of it being a hot potato, nobody wants it anymore, you see that those interest rates just being more, they're going sideways. So we have the whole narrative around here, around April, like nobody wants them anymore. But at the same time, since Trump was in office by January of this year, to this date, it fell. So, and not only that, it's less volatile as we speak. That creates liquidity. That drives Bitcoin price upwards as well. And I'm not sure many people talk about that, but it's extremely interesting for you to have that as a tool so you can track Bitcoin. And again, I'm not even talking about M2 here, that I know there's a lot of the M2 people like, yeah, just follow M2. But again, we already have a few chapters. Sina did a great job describing how M2 can be extremely misleading, because M2 does not mean that is liquid. It can be liquid, but it does not mean it is, and it also can be part of M2 as well. So Bitcoin price is just showing more and more how it is driven by liquidity and is being used as one of the assets, as a sponge for the whole liquidity that is being created. And what am I talking about? What is that liquidity about? So we have the one big beautiful bill from Trump that just told the whole world, look, we're not looking for austerity. We have to just hit the gas pedal and make sure we grow and outgrow the debt. And that debt, which is T-bills, right? Mostly T-bills, mostly on the short end of the curve. This is exactly what the market needs, and they're going to give it to the market. So markets are just expecting for liquidity to absolutely flood the markets. And instead of us just expecting, okay, so when is the US debt going to break completely or something like that, and expect a new system, you can just ride with it. And that's where Bitcoin, also along with gold and other risk assets like the S&P 500, you see that triangle getting set as a way for us to participate onto it, because you can't really avoid it, right? You can't just opt out of that system. It is part of the system, but Bitcoin provides a fantastic way, based on the fact that you're only going to have 21 million of them, to make sure that you're not debased on that system. So that puts you on the other side of risk. And macro and institutions and governments around the world are seeing exactly the same thing. So it doesn't really matter about our opinions about Bitcoin, if you agree with that or not. But I'm trying to give you data that is really going to that corroborates what we are actually seeing, and not exactly what we would like to see, specifically based on your opinions. But as an asset, as a way to provide protection about debasement, this is showing more and more like a commodity-like asset, so on and so forth. However, there are liquidity events that we see on a near future that might disturb a little bit of that price action. So I would not be at all surprised if we see a correction, maybe 10 to 15% could happen. We talk a lot about that in our Bitcoin intelligence report, so you understand why, and these could be great opportunities as well for yourself. But it is really becoming more and more as a liquidity barometer as we speak. So let's see if the price action. So there's no certainties at all. There are just probabilities. But for sure, Bitcoin is becoming it is really having its own place in the whole macroeconomics outlook as a global and true global and commodity-like asset.